And we begin with breaking news on the economy. The annual inflation rate continues to slow down. Inflation for January coming in this morning at 5.9%. That compares to 6.3% in December. The cost of food once again having the biggest impact. Grocery prices rose at a faster rate, with prices up 11.4% in January compared with 1 year ago. Overall, the inflation rate has been slowing since the summer amid a steady stream of interest rate hikes by the Bank of Canada. With me now is David MacDonald, senior economist at the Canadian Centre for Policy Alternatives. David, good morning. Thanks for being with us. Your reaction to this report this morning. Let's begin there.
Yeah, so it seems to continue the trend that we've seen over the last couple months of the slowing headline rate. We're also seeing a similar slowdown when we look at some of the shorter term measures. So usually when we're talking about this headline rate, we're comparing this January versus last January. But that will include what's called base effects. And so some change, in the middle of the spring would still have an impact on this figure. But if you look at month to month, if you look at 3 months, 6 months instead of the full 12, we are seeing some deceleration there. When we look at some of the core measures, which is more of what the Bank of Canada is interested in, again, we are seeing some deceleration there, although the main measures that the Bank of Canada itself tracks have not seen the same kind of declines that we're seeing in the headline rate. And so certainly, generally, a big part of this is what's called base effects. So prices aren't continuing to increase at the same rate. It's not to say that they're coming down, but we're sort of now slowly incorporating, or kicking out rather the months where we saw really big inflation at about this time last year.
All right, let's break it down a little bit. Talk about gas, first of all. Gas prices were back up in January. Is this a trend that we expect to continue?
They were back up a little bit in January, although the overall cost for owning a private vehicle actually is down a little bit, year over year. Of course, gas and food prices are very volatile, so they go up and they go down. And, consumers are well aware of that. You watch the gas pump, the prices of the gas pump go up and go down. And so when you're looking at core inflation, you take those pieces of it out. But certainly we're seeing a bit of an upswing, but it's not a dramatic one. In other areas, we are seeing more persistence in terms of increased prices. Certainly when we look at grocery store prices, but food prices in general. So the other piece is that going out to eat is much more expensive. There was a big upswing this month in the price of going out to eat. So the aggregate of grocery stores as well as going out to eat is hitting big highs. Rent costs continue to be extremely high, and new highs in terms of mortgage interest costs, which isn't a big surprise as more Canadians have to renew their mortgages at these much higher interest rates.
Okay, I want to round out the conversation by focusing a bit more on food, which you have touched on. But when do you think Canadians will catch a break at the grocery store, or will they? Are high food prices here to stay?
Well, I mean, the high food prices probably are here to stay. It's unlikely that food prices will fall dramatically. Now, the rate at which they increase might slow down. And so, you won't be shocked that the prices have gone up a dramatic amount the next time you go to the grocery store a couple months from now. But they're probably not going to fall. I mean, this is one of the things I think that's misunderstood about inflation is these prices aren't going away. They might just slow a bit. In terms of grocery store, the last 3 or 4 months, we've seen very high increases year to year on the grocery store side, and we're also starting to see it now on the on the food and restaurant side. So this is certainly a trend that seems to be sticking around.
David MacDonald, he's a senior economist at the Canadian Centre for Policy Alternatives. Thank you so much.